Amazon has reached this $1 trillion market cap milestone in spite of repeated attacks on Twitter by President Trump. These include accusing the Jeff Bezos-owned Washington Post of negative coverage due to the, quote, internet tax case in the Supreme Court, as well as accusing Amazon of using the post office as a, quote, delivery boy. Joining us on the panel to talk more about Amazon is Avery Sheffield from Vantage Way Capital. Avery, thanks for joining in on the discussion. I mean, is that political threat a major threat to the valuation? We've heard all the positives. Is politics the big worry?
I think investors are really discounting any major political pressure turning into anything material for Amazon. I mean, certainly the stock price has reflected, no worries whatsoever.
And in terms of the valuation that we hear and this sort of ongoing march higher, a lot of it's come in just the last year. Has the pace of it been too fast of late?
So I mean, look, Amazon is a very successful company that has delivered on each of the major areas of the business that they have pursued over the years. And as they've entered new markets, investors have assumed the same level of success as in the past. And to the extent that they succeed in meeting their own milestones and investors' milestones and new initiatives, the stock could certainly continue to run. Whether all the near-term good news is priced in is certainly, I think that's certainly the question here. But I mean, I don't see, in looking at the company, any major headwinds in the near term. There are more, but there certainly are areas to look at, to watch, to see whether there might be some weakness coming over maybe the next 6 to 9 months.
Phil, I mean, when you can't value Amazon like a traditional tech company. It doesn't have the profits the same size. Right. So how do you look at it? I heard maybe you look at the addressable market cap of all the businesses that it's trying to get into and that it's in already, cloud and retail and grocery. Is that how you look at it?
You got to look at the revenue.
Is the sky the limit then?
Well, it's cash flow. Obviously, you got to worry about revenue and cash flow. That's you start there simply because looking at top line earnings with a company that's bigger than most countries in the world today is really pretty difficult to get your arms around. Not unlike Apple, by the way. We've had the same conversations with Apple. It's what potential growth opportunities are they creating, and it's in the cloud computing. Although I will ask Avery a question. Recently I've watched Walmart earnings explode with Target. So now you're seeing direct-to-consumer opportunities created by big box retailers. I actually think that's the first sign of a competition situation for Amazon that we've not seen in the past. And that, to me, makes me pause on the stock here. What do you think?
I couldn't agree more. Jeff Bezos in the commentary that was just shown was saying, look, consumers, I don't think you're going to be coming to me saying, you should have shipped to me slower, you should have given me higher prices. But what's interesting now is that Amazon's fast 2-day delivery and low prices are not a differentiating factor anymore. I just received an item from Target last week in 1 day. I receive everything now from Target and Walmart in 2 days, $35 or under, for free shipping for Walmart, no Amazon Prime fee. These companies are dramatically outstripping Amazon's own core retail sales. I mean, Amazon's own core retail sales, their Whole Foods acquisition, grew only 12% year over year last quarter. The reason their sales grew in the 30 to 40% range was through the 3P marketplace. But what's really interesting about the 3P marketplace is I recently met the head of a very large 3P player, $250 million of revenue. They have 4 to 5% EBITDA margins. 4 to 5%. How is that sustainable? And they are working desperately to try to get off Amazon because they're continually worried about the revenue, the Amazon continuing to raise fees. If you look at the valuation that the bulls are constructing of $1 trillion or more for Amazon, almost half of that is actually the 3P marketplace. So that's assumed to be actually the highest value business, even more than the cloud. And I think that's where I would really look because it's like gold miners. Everyone's chasing the gold of revenue growth, and here it's the valuation of revenue growth. It's not even actually gold. Right. And if that were to weaken, there could be some weakness there.